So how do billionaires not pay taxes? I thought I'd make a video on this because it's always been of interest to me. I've always wanted to know why that stereotype of make sure that they pay their fair share. So let's go ahead and jump right into it. I really hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. So normal people like you and I. And yes, I'm saying you and I because either if you own a business or even as an individual, if you're in a salary, you still have to pay income based off of what it is that you bring in, and then you get to keep the difference. Now, I just want to jump right into it. The billionaires. I'm talking about the Mark Zuckerbergs, the Elon Musk, and the Jeff Bezos. I'm going to use Jeff Bezos as an example. They own these companies. A lot of these companies are publicly traded, right? They don't always have to be, but their companies are so valuable. They've built these businesses that have become so valuable that they're able to use those businesses and what they own of it, their stocks, as collateral. So Jeff Bezos, for those that are not aware, Jeff Bezos has a net worth of $200 billion. Not bad, right? $200 billion, a majority of his net worth comes from Amazon. He owns 9% of Amazon. Now, you guys let me know down in the comment section if you thought that he would have owned more. I mean, I was quite surprised. I think when I learned more about him, he owned about 14, 15%. But as of now, he owns 9% of Amazon. And that's where majority of his net worth comes from. Now, instead of selling those shares, where if he were to sell any of his ownership of Amazon, any of those shares, he would have to pay capital gains tax. So if he sells $1 billion worth of Amazon stock, he will have to pay 25% or whatever it is, the taxes, depending on the state that he lives in, right? With that being said, instead of selling those shares and having to pay capital gains, you're able to borrow against it. Again, using his stocks, his ownership as collateral from the bank because he's built something so valuable that these banks and these institutions allow him to. Because think about it. He can pull out $50 million, $100 million worth of loans. And of course, these banks are going to lend it to him because he's worth $200 billion. And what happens if he doesn't pay? Well, again, they have his shares as collateral. So even if he defaults, they keep his shares, which still hold that value. They're that valuable. And that's the beautiful thing about this. The thing that I want you to understand is he's able to borrow against his ownership. Therefore, he's taking out a loan. Don't just think about borrowing. He's taking out a loan against his ownership, his shares. And when you take out debt is not treated as real income. Now, before you start saying, well, that's not fair, he should be selling and then paying capital gains. Whoa. Let me explain. The most relatable thing that I can share to you on how we can compare to this is, let's say that you bought your house. Maybe your parents did. They bought the house for $500,000 and now it's worth more than $1 million. Well, instead of selling that house and then having to pay capital gains because now you've realized it, now you can just, because it's worth more, do a cash out refi. You get it appraised. A bank will now lend you on the new appraised value. And what previously was $500,000, you now have $1 million house. So you're able to take an additional $500,000 out in loans. So you are going to still have to pay for it, but you don't have to pay taxes on the $500,000 that you just got from the bank that they're allowing you to borrow because now your asset is now worth more. It's appreciated as the time has gone on. So even if you default, right, off of that loan, they have your house as collateral. It's the same concept, but in a much larger scale. They're able to now do this with the businesses that they've built because they've worked so hard in building something that is so valuable that these banks and these institutions allow them to borrow against. So you hear it all the time. These billionaires buying, like Jeff Bezos. He bought this $500 million mega yacht. I don't know what you want to call it. I think they call it the Cora. Personally, I could never buy something that, $500 million. So like I even have $500 million. But I honestly don't even think it looks that cool. With that being said, he could have sold part of Amazon, right, for it. And I'm sure, Jeff Bezos is notorious for selling ownership of Amazon as time goes on, but he could also just have borrowed against it. So instead of him paying 500 million cash, he just borrowed against it and then able to use that money and pay for this in cash, but then have a loan through a bank that allowed him to use his stocks as collateral. Does that make sense? Right? You hear it all the time where, these CEOs, these billionaires don't have a salary. They're not paying taxes. Well, because they're not actually receiving income, right? They're able to borrow against their shares and use that as income, but then they have to obviously pay that loan back. Now, I just hope that the example that I gave you of that house can make it kind of more realistic. It kind of humanizes it, right? Because it's more realistic for people like you and I to buy a house, and then later it appreciates, and then instead of selling it and having to pay capital gains, that we now are able just to borrow against it and do a cash out refi, and therefore we don't have to pay taxes on that money that we just got from the bank. We just have to pay that debt or that loan to that bank, and we're able to continue to grow our portfolios or reinvest it or spend that money however it is that you see fit, just like they are on their company. They're able to borrow against it, hoping that their company continues to appreciate in value. And if it does, they'll continue to make money. They didn't sell, so they don't reap any of the downfall of, well, you have to pay capital gains tax. And if your company continues to appreciate, you don't get to partake in that because you sold off your shares. No, right? I still see value in my company. I still want to hold on to those shares. I'll just borrow against it. And that's how, again, a lot of these individuals, a lot of these billionaires are able to buy such expensive things with very little to no salary. They're able to use their shares as collateral, spend that money that they borrowed as normal income, but because debt is not treated as real income, they do not have to pay taxes on it. Now, again, they still have to make payments, and this is why you see from time to time, Elon Musk is notorious for this, where he had to sell part of Tesla, a huge amount of his shares to pay taxes in other areas and stuff like that. So it happens from time to time, but I want you to understand why it is. And that's my biggest thing. It's not that billionaires don't pay taxes. If they receive any form of actual income or salary, everyone has to pay taxes on that, right? But when it comes down to their overall, billion-dollar net worth, a lot of these billionaires don't have $1 billion liquid, right? They have it based off of what their company is valued and their ownership based off of their shares, right? So it kind of just makes it a little bit easier to understand. If you ever have any questions about this, I would love to answer it to the best of my ability. Feel free to comment down below. And again, I really hope that you learned something new. If you did, please consider dropping a thumbs up. And also don't forget to subscribe. I upload new videos about the stock market every single day and would love to invite you to my live trading session. I trade live every morning right at market open, and that's that second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.